You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I'm Bill Powers. This is Mining Stock Education. Joining me is Joe Mazumdar, expert commentator and investor in the resource sector. His website is explorationinsights.com. Joe, thanks for coming on the show today. I'd like to pick your brain for my own learning and the learning of my audience regarding a lot of these transactions we're seeing in the mining space. And let's start with one that came out of left field that I'm sure nobody saw unless they were putting the deal together. But AMC and Eric Sprott going in to finance Hycroft Mining. What is your analysis of this transaction?
Yeah, that's an interesting one, Bill. Thanks for having me again. So Hycroft Mining is one I visited a couple of times when I was an analyst with Canaccord Genuity. And I was always the impression that the process they had to put together to basically get the gold out of that low-grade deposit wasn't going to work. And so I was always sort of negative on it technically. And it failed once. And then they made a special purpose acquisition company that acquired the asset again. They raised more money. And then the process didn't work again. And then, basically they were trading at 20, 30 cents, and then they needed money. And at that point, no institutional equity fund that had done all the prior due diligence was willing to give them the money because they didn't think the process worked. And if that process didn't work, then they would have to put an autoclave in or some kind of roasting facility and just say, hey, that's going to cost a lot of capital, and that's going to take maybe 10 years or infinity to permit. So I don't want to touch that. Then in the meantime, they basically got people that were interested in just looking at the gold ounces, which are huge, and saying, hey, look, if you're interested in gold, this is an interesting leverage play. And so Eric Sprott came in with 28 million. And then they brought in one of these companies that was a big Reddit crowd company called AMC, the brick and mortar theater company. And that company basically brought their Reddit crowd, and that's what they were pushing and said, they can't help you with mining and they can't help you with the process, but I can help you with liquidity. And they really helped with liquidity because, they traded, like we were talking off air, about $1 billion worth of shares yesterday, and they're trading another 800 million today, and their market cap is 500 million, but it was 10 times less than that early in March. So this has been another Reddit story where let's say the people that have done the due diligence say it's not worth this much, it's never going to happen, and keep shorting the stock. And then the Reddit crowd, I can see, the discussions on their board saying, okay, hey, the short positions have come up. Let's hit it, guys. And then they're hitting it with $90, $100 trades, and they're really hitting it hard and pushing the shorts out. And then every time we see this leap in share price and huge liquidity. And I think the big connection there was Mudrick Capital, which had invested a lot in AMC. I believe it was last year or the year before, over 200 million. And they also, Mudrick owns about 40% of Hycroft. And I think that was probably the connection that got AMC into Hycroft. It's been a boon for Hycroft to go from 25 cents to 260, 270 right now on no news. And AMC definitely brought the Reddit crowd and brought the liquidity. Technically, nothing has changed for me, but obviously on a valuation basis, it's changed significantly.
So, Joe, when I'm looking at my stock screener in my portfolio, and yesterday when Hycroft Mining was up 80% in a day, 80% in a day, yeah. And then I'm looking at my portfolio down 5%, flat, down 8%, up 2%, and then you see this big green, stick up 80%. How should I view that? You think you do your due diligence and you put your money into the sector, high risk, high reward, and then all of a sudden this stock goes in 2 weeks tenfold. How do you view something like that?
Oh, it's It's probably the same as the market would have been looking at a lot of these meme stocks during the COVID pandemic. Like all these people were at home and looking at these things, and there was a mentality against the smart money to say, "Oh, look, these guys are going against my stock." Let's push them out. And these boards, with all these people doing small shares, the little guy would push on the big money and Wall Street or whatever. And that's transferred into this stock. I know that previously the silver guys were trying to do that with the silver company. I think we said First Majestic or something, which did not pan out. But bringing AMC on there and all those people that made money on AMC into this one, that's worked out much better. So I don't think I answered your question in terms of how you look at this. But I mean, if you get a Reddit account,
well, I guess it's fear of missing out, right? Or not fear.
That's exactly.
I mean, it is.
Exactly
honestly, it is.
Exactly
80% in a day versus I do due diligence and I think I got a good company and it's down 2% while it's up 80%. You just kind of say to yourself, like, what am I doing? Or what am I missing?
You're going through your due diligence. Okay, here's the management. Here's the asset. Here's the share structure. Oh my God, they need money. I'll hold back. And they got this debt. They have that debt that they had from Sprott lending that was sitting there as well, that they pushed back for 2 years once they got this money in. So, and then they did an at the market facility. So they had that one sitting out there and they totally filled that one, which was 138 million. So between that, they almost raised like $200 million in the last month. The stock that, nobody was willing to give them any money. Just, maybe in February, there was no way that they were getting any money. So big turnaround.
Will it affect the other stocks though? If generalists are being drawn to the gold stocks through Hycroft, are they going to put their dollars in any other stocks besides Hycroft? Because it doesn't seem like there's been a general lift from this promotion.
No, it's very specific because I think the Reddit crowd is very specific in terms of they've got their own group, and that same group made a lot of money on AMC, and they had this sort of play in terms of shorts, squeeze the shorts, everybody pile in, and we'll get these guys. And so they're not thinking about the asset, the management team on Hycroft, permitting in Nevada or nothing like that, or the metallurgy or the refractory nature of the ore. They're just thinking about, oh, look, this hedge fund hates it, or this guy hates it, and they're the short position. Let's nail them. And that is basically what's going on. It's hard to make that play because when you look at it, I'm more on the side of the people that are shorting it, thinking, well, this doesn't make any sense. But even though I'm not buying it, I'm definitely not shorting it at this point.
But we're definitely watching what's going on. That's for sure.
Oh yeah, it's definitely an interesting. Does AMC think, this is a way of making money? Maybe I could do this again. So
it's a case study in psychology, right?
Exactly, because even Eric Sprott, who has his own following among retail gold bugs, could not bring this kind of liquidity into Hycroft, as did AMC, and with their crowd. That was huge.
All right, so let's travel from Nevada, where Hycroft is, over to Mongolia. Rio Tinto makes an all-cash proposal to acquire full ownership of Turquoise Hill. What's your commentary here?
Well, I guess the thing is that, copper projects, development projects, advanced projects are rarer and rarer. And the thing is that when you acquire something, when you make an acquisition, the easiest acquisition to make is to increase your ownership of an asset you already own. Okay. And when I was at Newmont, we did the same thing at Boddington. We owned, I believe, 2/3 of it. Then we took AngloGold's portion out. And so the due diligence is easy because you're already operating it. You already know everything about it. And they already had all their ownership of Oyu Tolgoi caught up with their ownership of Turquoise Hill. What they just did was they increased their ownership of Turquoise Hill to take the whole 66% of the asset. All the risks remain on development of the underground. And, I calculated, because this is a big project. This is like, I believe about global resources, about 100% base, about 90 billion pounds of copper at about 0.9% copper equivalent in terms of my estimate. But they spent, for reserves, they spent about 30 cents per pound, which is comparable to what South 32 paid for reserves of Sierra Gorda when they bought that in Chile, an operating mine. But on a resource basis, they spent about 9 cents. And why is that? Because Oyu Tolgoi has a huge underground resource that you would have to drill out a lot more to convert into reserves, which is not in reserves yet. So that's sort of showing to me that Rio Tinto is thinking there's not a lot of copper assets out there. We can make a punt on this one. We're already in it, take a bigger stake and clean up the ownership in that, such that we're negotiating cleaner with the Mongolian government and how we forward on Oyu Tolgoi. And probably in the back of their minds, they're thinking, Jesus, resolution has taken such a long time. We've spent $2 billion on that. And, we just had our permit suspended and, now we're still doing the land swap again. So why not take a chance on this? And then I guess now we'll move on to the other copper project that was acquired, which would have been Reko Diq in Pakistan.
And I want to ask you about that, Joe, because last year I was offered the ability to help finance a private company that had a nice copper project in Pakistan. And I knew nothing of Pakistan. I just typed in mining Pakistan copper projects, and up came articles about how Pakistan was not allowing Barrick to move forward with this copper project, but now all of a sudden they are. So what is your commentary here? Is Pakistan opening up to Western investors?
Yeah, I don't know if everyone's going to jump in through the hoop to go into Pakistan, but I mean, it's the sort of change in Barrick once Mark Bistro became CEO. He doesn't mind negotiating with heads of state in countries that are sort of like on the edge with respect to geopolitical risk, like as he did with Tanzania. They continue to operate and expand in the DRC, and most of his value add was in Rand Gold, operating in a lot of shaky regions of Africa. So I'm sure that they might be thinking that this might be a comparative advantage they have. And then when they look at because the rumors are that they had an opportunity to bid on Great Bear, but they didn't want to pay a premium. They are copper gold assets in British Columbia and the Yukon that they haven't jumped on, but they're probably thinking, here's an advanced project that we already know. We've already done a feasibility study. Granted, it's probably a decade old now, but that's decent grade. And maybe we can just make that work. So this is about my calculations, 100% basis, 74 billion pounds of about 0.6% copper equivalent. So what they've done is gone from 37.5% to 50%, and Antofagasta has pulled out. So Antofagasta is the same company that had their permit suspended or rescinded on their Twin Metals project in Minnesota. Has pulled out of this one, but they received $900 million in cash. So that $900 million that they get sort of puts the valuation of the global resource of this asset at about 3 cents. So it's pretty low because of the geopolitical risk and what they're willing to pay. It's not as if there's a lot of people trying to get into Pakistan right now. But from Barrick's point of view, they're thinking, well, nobody else can do this but us. And what they've done is they've always had the provincial government in the ownership, but now they've brought the federal government of Pakistan into the ownership. So that would help with the permit. But then, you take it from their point of view. If they did this in the States, they would do all this, but then they would know when to permit, when the permit would come. It's supposedly transparent, like we think.
Or if they get the permit and then the permit's taken from them, which we've seen, yes, which is very frustrating.
Which is very frustrating, and we'll talk about this as well. So if you have that in your back of your mind, and then you have this resource, you talk to the government, you've negotiated probably in the back rooms for about 4 or 5 years, and now you say, well, now we could do this. Let's do it. And then I could see a path to developing it within 3 years, a much shorter time frame. So And then you add that on to what's happening in Peru and Chile. So all that, frame that and their previous exploits with Pascua-Lama in Argentina. So then they're going, well, maybe this is the place to go to, and it's, the price is there. And so from a risk reward basis, it might make sense. But, now we're talking, it was a $3.3 billion upfront capital, maybe a decade ago. It's probably over 5 to 7 now. But then you got to think, okay, if they do this, are they ever going to do Donlin? So can they do 2 of these projects? I don't know.
So Donlin, you brought up Alaska, a stock that you recommended, Trilogy Metals, who has been a multi-year sponsor of this show. They spend 5 years getting an environmental impact statement and a permit for their road that they need to connect to the Dalton Highway. And then all of a sudden, the Biden administration says, well, not so fast. Let's look at this again, even though the permit was issued. What's your commentary here?
Well, the pattern seems to be there, like not only with the Ambler Access Road, the 211-mile road from the Dalton Highway to the Ambler Mining District, which is the joint venture between Trilogy and South 32. But the thing about the twin metals, we saw that. And the other thing we talked about was resolution. All those 3 had positive forward advancements during the previous administration, Republican administration, but have gone backwards, under this administration. And specifically, I know Trilogy more than I do with the resolution and with Twin Metals, but this was, I don't know, a 1,500-page document with that's taken multi years to put together, and it's being put together by the Alaska Development Fund and not South 32, not Trilogy, and not any corporation. It's being put through by the Alaska government. So you got strong support from Alaska state government. You got strong support from the senators. You got some strong support from the Native Corp where the ground is on. So you're thinking, well, all the stakeholders are there, and then a group of 50 people, 100 people, maybe in 3 or 4 villages that are anywhere from 20 to 70 miles south of the road where it connects to Dalton Highway, are basically drumming up support from these NGOs to say, hey, the process wasn't followed. We weren't consulted, which is hard to believe considering how long that process took. That these people weren't consulted previously. So that's a shocker for me, very disappointing. And as we talked offline, was sort of saying, well, if we all were thinking that the States was transparent, but took a long time if you followed the process. But here, these people followed the process, did everything, went through all the hoops, and actually got issued the permit in July 2021. And then here we are in 2022, and then it's been taken away. So that for me was a shocker, because now with all the rhetoric around electric vehicles, greenhouse gas emissions. Now the issue with, Russia's invasion of the Ukraine, problematically, sifting supply chains and generating a lot of market segmentation is sort of like, well, you can't have one without the other. Either you're going to be dependent on other people, or you're going to do it yourself. The problem is that you can't talk this way and then do something completely different and expect a different outcome, because, basically you're screwing yourself, because the States and all the continent of North America has a lot of resources and can do a lot of things. But the problem is if we keep stopping these projects, which have done everything you've asked them to do and still they can't proceed, then we will get Barrick going to Pakistan. Then we will get Rio increasing their stake in this project in Mongolia. That's where you're driving them.
And don't you think you're keeping capital away from the United States? Because South 32 committed $150 million into Trilogy Metals with the expectation that the permit for the road would go through like it did. And now if you're South 32, you're looking at this and saying, wow, what do we just do here with our money? And if you're looking to purchase a project, I'm assuming these foreign miners are saying to themselves, we don't want to deal with the federal government. Give me private land or give me something where I don't have to deal with the BLM, right? If I'm going to invest in a project.
Well, that's what South 32. I mean, they spent almost $1 billion or more on Arizona mining to get the Hermosa project, the zinc project in Arizona. But that project, the scoping study, was done only on the private land, not on the BLM land. But the problem is, most of these companies, when they buy something, they want to make it bigger. And when you want to put the tailings or the processing and stuff like that somewhere, you might have to put it and then access, because you don't fly out gold from the site. You have to have a road to take out the concentrate. Then you have to put it through a national forest, and then all the permitting around that. So, what it's coming down to right now, it seems like, for whatever reason, Nevada seems to be the state that it still seems to work. But there's few other states where it seems to be able to work.
But doesn't the Fraser Institute list Arizona and Idaho pretty high still, though, at this point?
Yeah, but I don't read that anymore. The big deal is that what you see happening. That's what happens. So if you look and you see Arizona the way it is, maybe you can permit something, but like Safford, when I was with Rio Tinto, that took 10 years to permit. And then when it actually did get permitted, we missed the cycle, or Phelps Dodge missed the cycle, and then they built it, and then they had to shut it down. Then they started again. So it does take time. But I think the thing is that people are okay with the time if the transparency is there. The problem right now is the transparency seems to be gone, is to say, okay, we did everything. Here's the document. And then they tell you, oh, you got 30, 60, 90 days. This is how the process works. Then we issue you a record of decision. Okay, great. I got my record of decision. It's positive. Let's go. And then they say, okay, wait a second. I want to take that back.
So can we say fairness? Substitute transparent for fairness, right?
Yeah, because I'm thinking, as we were talking offline, the bureaucracy is what should drive the permitting, not the who's in government. It shouldn't go all one way 1 year and then all the other way the next year, because like we were saying, these are 10, 20-year mine lives. They can't deal with that. And it's not as if the process, how can you get a process when, with the road and that you've been trying to build for 5 years or so and have a 1,500-page document and then say you missed something? How's that possible when you had all those meetings? So I don't get that. So,
Joe, there's a lot going on in the world, and the big thing is the Russia-Ukraine-NATO conflict. How is this affecting us as commodity and mining investors? What are some of the key takeaways that you're observing?
Well, I mean, we saw something like let's say a Reddit move on nickel, where there was a short squeeze there. So we had a nickel market that the inventories were shrinking. So it was a positive market, and nickel was doing well without the invasion of Ukraine initially. But then we had, let's say, a conspiracy of things happening, not a conspiracy, but let's say a combination of things happening which conspired to push the nickel price, well over $40 per pound, where we had a Chinese company that thought, okay, we're going to grow our nickel production. That's going to put pressure on the nickel market. So the nickel price is going to go down. So we're going to short nickel. So they had these big short positions on nickel. And then at the same time, they obviously didn't predict, nobody predicted, Russia invaded Ukraine. And one of the biggest nickel mines in the world, if not the biggest nickel mine, is the Norilsk operation in Siberia. And then there's the sanctions hit. And so then suddenly, that significant amount of nickel, is technically off the market for the Western economies. And so the nickel price, makes a big move up because of a squeeze. It's since gone down, but the problem with that is that, the nickel is going to be used, and the underlying demand is for this electric vehicle market. And these people look to see the battery chemistry, and then they look at the commodities that they require for the batteries and say, okay, what's this going to cost? How much can we get? What's the security supply? Blah, blah, blah. And then when they see this volatility in nickel, then they sort of go, oh, hang on a second. Do I need to basically reduce the amount of nickel I need because of the volatility in the nickel price? And that's demand destruction potential is probably the risk that I'm worried about with respect to what's happening in that market.
Same thing with palladium then, because Russia produces so much palladium?
Yeah, palladium as well. And a lot of that palladium actually goes into the States, So then you got to think about, where else can you get palladium? And because we're still in a market right now where we have a chip shortage with respect to manufacturing cars. And now, and we need the palladium to reduce emissions on the catalytic converters for the kind of fuel we use here in North America. So this market segmentation should make us think, royal us, think about, the projects we have close to home that make sense, that should get permitted and generate goodwill in terms of capital being invested into your region, and saying, wow, I'll do this because I know that it'll take a little while, but it's transparent and I'll get permitted. That's still the case for Canada. Like in British Columbia and I think Ontario and most of the provinces here, but it seems to be getting worse, not better in the States. That might change with the midterm elections when people have to negotiate things, and maybe they'll make some things happen. But again, that shouldn't be the way it works. There should be an underlying bureaucracy that looks at all the data and makes a decision, and in Trilogy's case, they made the decision. But the problem is now that they're taking a lot of these decisions back.
Joe, before you go, you were sharing with me before we hit record some insights on narrow vein mine investing and how difficult it is. I was absolutely destroyed in my portfolio last year with Arcana Silver, narrow vein silver mine in Colorado. It's not going as planned, and consequently the share price is a fraction of what I invested in last year in my last private placement. But for the audience's sake that didn't get to hear what you shared with me, what are some things you look for in a narrow vein mine? What are some things you look out for in a narrow vein mine?
Okay, well, I mean, I did a piece on this one company called Gatos Silver, which had been operating, had a feasibility study, went straight into operation, and was producing silver, and they were making some money, but they kept talking about, hey, look at the grade, and it was very volatile, the grade year on year, quarter on quarter. And then I didn't know much about the project, but then they released their full year production numbers, and then they said, oh, we had our biggest quarter or something like that. The grade was up based on the third quarter. Everything looks good, blah, blah, blah. Then about 2 weeks later, they basically said that, after a year of mining, there's a problem with the resource and reserves, and it looks like we're going to have to work on this. We might not have a release until the middle of the year, but we look to maybe take a hit about 30, +% decline. And then we're going, well, what the heck happened there? And so as I went into the deep dive, that might help a lot of your listeners in terms of just looking through some of the issues with that one specifically. One was the drill spacing. In terms of when you get to underground mining, you don't want to have you're going to have a lot of indicated because it's expensive to drill measured from surface. So what was weird about that project was how much measured they had, considering all the drilling was from surface, because the only development they did underground was actually to get to a bulk tonnage sample, but it didn't go through the veins. So that was number one, the amount of certainty that they thought they had, which they really didn't have on a narrow vein mine in Mexico. And then the other thing is that they actually changed the cutoff grade from the resource to the reserves. And that happens as you get into reserves but you want to be more selective. They got less selective. They actually reduced the cutoff grade and put in more. And so their measured resources actually generated more proven reserves than it should. And so that was another red flag. I didn't know what was happening there. Another was the estimation methodology. And so the high variability of gold deposits and these vein deposits suggests that, you have to use some estimation methodologies which limits the amount of influence that a sample has, beyond where it's actually drilled. But some methods smooth it. So if you have a disseminated deposit, a methodology like ordinary kriging works well. But if it's a narrow vein and you take it, you get a drill hole here and then another one there, and then it basically takes that grade and then basically just meshes it into the next one. Then you get all this supposed ore in the middle that really doesn't exist. That was just a computer thing because you forced it into there. Whereas if you see that they use a methodology that sort of tightens that influence, that's better because that's more close to reality. And I think that's part of the issue that they're dealing with now. And so those were several red flags that I found. That document is now, free on our website, explorations.com, as you said, and they could pick it up there.
ExplorationInsights.com.
That's right. Yeah, I should know my own website. And that's probably why people don't go to it when I tell them to go to it, because it's not the right website. So.
Your newsletter, you offer commentary and you also do a lot of site tours. So before you recommend a stock, you're often boots on the ground, aren't you?
Well, problematically, in the last 2 years with COVID, I have had to trade stocks that I haven't had to go boots on the ground yet. And now I'm catching up on a lot of stuff now. So I was in Argentina a couple of weeks ago, and now I'm heading back down to South America, to Brazil, to look at a copper company down there. So yeah, I'm starting to pick up the site visits now as the COVID restrictions come off.
Excellent. Well, Joe's website is linked in the show notes, but again, it's explorationinsights.com. I encourage you to go check it out. And there are a lot of free educational articles you can find there, as well as information on the subscription service. Joe, thank you for this mentoring session. Really appreciate it.
Thanks, Bill.